Good morning. Welcome to the market forecast, Friday, October the 2nd. John Hoagland thanking you for trusting me with your time. We certainly have a lot going on in the world and in these markets this morning. There's going to be probably some decent opportunity. Um, I usually like to think of Friday just a way to finish the week strong and try and make a little bit of money and you can call it a weekend, but there's certainly some things going on that we're going to need to pay attention to. As always, I start with reminding everybody it's so important to put the markets in context. The market state that you're in is completely vital, and we never really know 100%. You hypothesize the market state, you trade to that hypothesis. Keep risk management at the top of your mind at all times. As far as economic releases this morning, we're all aware that the unemployment numbers came out this morning, and they were looking for 8.2. It came out a little bit better at 7.9. Now there's some underlying information there. The non-farm payrolls was bigger than expected, but not the private non-farm payrolls bigger than expected, but non-farm payrolls was a pretty good miss. Now there was an adjustment to last month's number on the non-farm payrolls, which was higher, and also they adjusted last month's on private non-farm payrolls to a lower number. So there's a lot to digest in these numbers, and we're going to be trading what we see. Also at 9 o'clock this morning, we have Michigan consumer sentiment and also factory orders due out at 9 o'clock. That's going to wind up the known information for this week. As far as news is concerned, and yes, good morning, Lacey. Lacey says good morning, everybody. The president and the first lady have tested positive for COVID-19. Apparently, they're both feeling well. Of course, we pray for everybody who is affected by COVID-19. But they're now in quarantine. Apparently, again, feeling well. Trump is going to continue his duties as the president from the White House. Stocks obviously lower on that political uncertainty as well as other political uncertainties. Add the failure to reach an agreement on stimulus. Things are a little bit weakening. You see it in the VIX. The VIX is up over 8% this morning. It's trading at 28.86 last I checked. But talks are due to continue today on stimulus, so we'll see how that plays out for us as the day goes on. I'm hoping for some more help for people in the United States. It's going to be probably a relatively emotionally charged day. There's going to be probably more headline news coming out. Keep your ears and eyes peeled. Make sure you protect yourself. If you've had a good week, even if you haven't had a good week, of course, we always want to stay patient. But if you've had a good week, protect those profits. Don't ruin a good week just because you're excited and the markets are busy and moving. Just manage the risk. Protect profits for the week. I'm going to say crude kind of fell off my radar this week. I feel like there was probably something that I could have seen or that may have tipped us off to this downside move. Of course, news is always involved in it, but I'm going to spend a little bit of time this weekend researching and taking a look back and seeing what it is that I may have missed that may have provided more opportunity. I was so focused on the opportunities on the gold that the crude kind of slipped off my cracker, and I'm going to take a look and I'm going to see what I was looking at, what I might have been able to see that may have provided some better opportunity for, of course, myself and for you. That's why we are here. We are here for you. So make sure you like, share, comment, question, feedback, and heckling are always welcome. And make sure you subscribe to our YouTube channel. You can get notifications when we do go live. And we do have more and more live information coming out all the time. So on that note, I'd like to say good morning to everybody. We got Felix. First in the room today, Felix. You win the prize, MSS Capital, Fanis. Howdy, everyone. Yes, prayers to the president and, of course, everyone affected by COVID. Nice to hear from you from South Africa. Charles, good to see you. Yes, prayers to all impacted by coronavirus. Nick Mo, Danielle, Guten Tag, Rational Investor, had a comment that he retracted there. I'm not sure what that's about. Nice to see you, though, Mr. Beamish. Charles, Rob T, Tanya, good morning. Do you know if TST will support NQH2O trading? It's a little early to start thinking about that. We only will support mature futures products. You know, we want liquidity and we want volume before we're going to add them. But you know, as that product kind of comes out, and we'll see how it trades, and then maybe something that we can think about in the coming days, weeks, and months. I do love beach balls. John, good to see you. Caesar, hello everyone. Daniel, thank you for the golden knowledge and providing on a day-to-day basis. Thank you, thank you, thank you. It's all for you. That's why we're here. Dem Rep of Dave. Hey, all, welcome, Dem Rep. Mike, good to see you. Manny, Subconscious. Dolby, hey, Hoag, when your setup happens, do you always take it even if it feels funny? Dolby is a great question. Those that know me know that some of the best trades I've ever made have been the ones I've been most afraid of. So even if it feels funny, if it's part of my strategy, part of the context and part of the hypothesis that I'm trading at that time, I'm taking the trade. Sometimes the ones that seem like layups, for those, they quite often they tend not to work for me. It's the ones that I'm trading on the fringe, I'm trading on the edge, I'm trading where not a lot of traders are trading, and it makes me nervous. And if it makes me nervous, it usually tells me this is something that I really want to pay attention to. What a great question, Dolby. Looking a bit serious this morning. I don't know, I got my safari helmet on. I'm looking for opportunities. Uh, hanging in there, bud. I'm hanging in there. I'm hanging in there. Thank you. Top of the morning to Lacey. Alan, good morning, good afternoon, good evening. Jimmy, that looks like kind of a new name. Welcome to the Market Forecast. If this is your first trip here, we're glad you're here. AYSE, top of the morning to Lacey. Doyle, Esteban, Rocker, good to see you. It's the weekend, time to rock. George, seems kind of quiet so far. Maybe calm before the storm. Quite very well could be. Alan, Troy, good to see you. Charles, same with me, John. I haven't checked crude this week, but went from $40 to $37, right? I mean, $37.50 is the weekly kickoff low, and we're below it now. We're going to take a look at those on the charts, which, by the way, I do have stable for us this morning. Good news. Good morning, Chris. Smash like the button, crypto kids. Alex, Joshua, good morning. Tanya, thanks. That's what I was thinking. Yes, Daryl. Prima, Daryl, good to see you again. Dolby, you know what I'm saying. You know what I'm saying, man. The good trades are usually the ones that scare you a little bit. AYSC, top of the morning. Do you also see the S&Ps going lower on your charts? Daily, 120 minute. We're going to take a look at those right now, AYSC. We're going to see what we're looking at. And we got our rocker salute. Woohoo! Yeah. There was a question yesterday, and I don't know if Joe Clark is here. Joe Clark asked when we were talking about that opening range trade in gold yesterday, how long the opening range is. And I want to answer that question to everybody and to Joe. Hopefully, if you're here, you're going to hear this. My opening range that I look at is 1 minute long. It's the first minute of the regular trading hour session. So treasuries, gold, currencies, 720 to 721, opening range. Crude oil, 8 o'clock to 8:01, opening range. S&Ps, all the equities, 8:30 to 8:31, opening range. It's an old pit term that when the bell rang, all the brokers in the pit had orders that were due fills right on the open, right when the market opened up. And if there was a lot of orders to get filled, sometimes it would take a longer period of time and a wider price range for all these humans to fill all these orders. So when the open settled, the exchange would poll all the brokers and say, we're thinking the opening range is this. And if you traded outside of that, you'd have to say, no, I need this. I need another tick higher in the opening range. I filled an order there. Once that was established, then the opening range came out. But that was when humans were screaming and hollering and chasing each other around to get these trades done. Sometimes it took a little longer. In electronic trading, if I have something I want to do right on the open, I push a button and it's done. So that's why I keep my opening range in electronic trading to 1 minute. Joe Clark, I see you are here. So there's why I like the 1 minute opening range. Eileen Hoagland, good morning. Nice to see you, Eileen. I love you. It's so great to see you. Thanks for joining us. Okay, now we're going to get into the teeth of the forecast, and we're going to take a look at what we're seeing in these charts. Nobody knows 100% what's going to happen. We are looking for probabilities, and we are looking for asymmetric opportunities. Asymmetric opportunities are opportunities where you can risk a little bit for a much bigger reward. Oh, it's Rick. You must be on a different computer. Well, hello, Rick. I love you. Tell Eileen I love her too. Let's get into this. Let's take a look at the charts. Okay. Energy has been building for days. There's been a 38,000 increase in open interest in crude oil. That's probably one of the things that I probably should have been really noticing. Now, we had a kind of a coiling, we had a wedge pattern here, and we kind of broke out of it. So yesterday I put this balance area here, and we broke out of the balance area and we drove lower, closed below it. That to me is a technical break of a range, and I will look for a continuation of the downside. But again, it wasn't necessarily on my radar. Lacey, would you please? I'm talking. There must be somebody in the field behind the house. Anyways, so 37.50 was our weekly kickoff low. This was the area where we were expecting longer, stronger money to come in to the marketplace. It appears as though they've come in a little bit early, and of course with the news about no stimulus yet and the president, we're going to probably see some sellers coming into this market. So looking at what we're seeing this morning on the open, here's our 37.50 weekly kickoff level. It was supportive yesterday. Last night we broke below it. We spanned it. This morning it's become resistance again. So if we do get the opportunity for an execution there, there's a good asymmetric opportunity where we're going to be able to limit the risk, and we may see a larger profit target if that is the case. It would appear that we've left the opening range, that first minute of trade from 8 o'clock to 8:01, at the high of the regular trading hour session. We've got a gap, so we have gap rules, and we have some pretty considerable short time frame shorts likely still in this market. From Wednesday, Thursday to today, we've been in a pretty big slide. At some point, I'm going to probably be looking for some sort of profit taking from shorts at some point today. We don't know when that's going to happen. We don't know if it's going to happen, but it is something that will be on my radar. Okay. So I'm the opening range is the high of the session. I'm not going to be looking for longs until I can find some sort of daytime frame structure to lean on. Why? Because it's going to offer me the opportunity to limit the risk. That's the whole goal of this, is to limit the risk. So the gap rules are in play. If we can't close that gap relatively early, we're going to go with the direction of the gap, which would have us looking for shorts, the opening range being the high. It's looking like a down day here today, but again, we have to be careful. It's been a big move to the downside at some point. Some of our some of our weaker hands traders are going to take profits at some point, which may provide an upside opportunity, but that's going to be a fast trade. That's not going to be something I'm going to fall in love with and think that I've picked the very bottom of this. Okay, let's take a look now at the E-mini S&Ps, and we'll see what Lacey has to say about these. All right, 3320 was weekly kickoff high this week. We broke out above it. We held above it. It was supportive for most of the week in regular trading hours. This is the day Monday, Tuesday, Wednesday, Thursday. This is the day we broke out. We opened above it. It was supportive that day. Didn't get to it that day. Inside day yesterday. Maybe that momentum was beginning to fall off technically, not just because of the news. The news came out. We are going to have a gap. We are going to be opening below 3320, which is, again, an important inflection level in longer time frame. So I'm going to be looking for opportunities possibly near this 3320, but you have to be careful. It's going to be a pivotal day. We can see already in the overnight that the market has been spanning both sides of it. It's become a little bit magnetic as the market digests new information. But I'm thinking that if we do get some sort of directional activity, it will probably start near this 3320 weekly kickoff level. We have a gap. If we can't close the gap relatively early, that's going to be saying that we are accepting lower prices and we're going to look for opportunities for shorts. But this whole balance area here is going to confuse things a little bit. I think it might be somewhat of a choppy open. I will watch the opening range trade for a possible opportunity. But I think my focus is going to be probably closer to this 3320 level. Well, let me see what else I've got here. Yeah, that's about it. As far as open interest is concerned, Wednesday we added 13,000. Yesterday we added 6,000. So we added 19,000 in open interest in these 2 days that were largely range bound. So, you know, what that means, did we get some longer term shorts preempting this move down below this 3320? Is this an area that they're going to protect if price does get back up there? Trade what you see. Watch that opening range trade. Remember, we do have some considerable overnight shorts. Those overnight shorts are looking for help from regular trading hour, longer time frame traders to continue to move this market lower. If they can't do that, if we can't maintain price below this 3320, then I see a possible inventory adjustment from short time frame shorts that are in the market from overnight to a possible move back to close the gap or a move back to settlement. Remember, this is a headline-rich environment we are in today. Anything can, and when futures are concerned, or dogs, the things that can happen usually do. The NASDAQ is in a little bit of a different situation, and there's a bit of a disconnect in open interest between the S&P and the NASDAQ. The NASDAQ has lost in the last two sessions 27,000 in open interest. That's 10% of the total number of contracts that were out at the beginning of the week. We've lost 10% of those. It's as though money is just coming out of the NASDAQ, and it's going to come back in at some point. Where, we don't know. We're still above weekly kickoff high here in the NASDAQ. The NASDAQ has been kind of habitually presenting as stronger than the S&Ps. Here's our weekly kickoff low. We tested it on Wednesday. Looks like we may get a test again, perhaps today. We don't know. If we're going to be looking at short time frame information, and I believe largely in the NASDAQ we are in short time frame control, we're going to be looking again. Settlement is way up here. Settlement is up at 11,574.75. All of our overnight trade has been to the short side, especially in short time frame. We know it's short time frame because it's the shorter time frame, weaker money traders that are trading overnight. Look at the volume last night, though. Some pretty decent volume for overnight trade. So I'm looking for an opportunity for continuation to check weekly kickoff low, which has been supportive as it was in the S&Ps all week, S&P is already at risk of accepting below it and finding some possible continuation, where the NASDAQ seems as though it still looks like an area where it's a weakness that I would like to buy. So there's some conflicting information, and there always seems to be in trading. You know, they're related, but they're not one and the same. We have to trade what we see in the product that we're trading. The um, correlations are okay, but the information you need is in the market that you are trading. All of the information, all of the collective perception of value is right in your charts, right in your profiles, and right in front of you. So it's up to us to decipher what's most important at that time and make our choices in that regard. So gold, I've been chomping at the bit to have another opportunity to see this market get back to that 1923.70 previous all-time high that was in September of 2011. Look at how that level has supported price for a month and a half, 2 months, 3 months. Now we're getting a look at the other side. What was support may become resistance. We got within a tick of that number last night. Our weekly kickoff number is rounded to 1924 because nothing is finite in futures trading, but you don't get much more finite than trading to the tick to an inflection level that we've been watching for several months. I don't know if we're going to get the chance to see that today. Our opening range, I didn't take it today. We've had 3 straight days of really good opening range trades. Today we opened right in the middle of value from yesterday. That tells me that the market is more likely to chop around and give me better trade locations as the day goes on. The risk-off mentality may be coming back into the markets. We see that in the VIX, which is 8% higher this morning. What are we going to do in gold? Here is why I did not take the opening range trade. It's because we were right in the middle of value. Now we're starting to see a little bit of resistance at yesterday's high. I wish I was here to see that and to be able to respond to it, but we're seeing a nice little pushback. So we've been moving price higher over time. Value's been moving higher over time. We're up against an important inflection level. It would make sense that we may see some profit taking at the end of the week here. So uh, let's take a look at our currencies and we'll get back down to business. I'm afraid I'm getting a little long winded, and I do have a really cool announcement for everybody after we're done here. So the euro 3 day balance forming. We're kind of pushing the low end of that 3 day balance overnight. Open interest lower. We lost about 2,500 yesterday on this move to the upside, not necessarily telling us that the auction to the upside is healthy. The auction to the upside was falling off. We lost open interest. Our volume fell off a little bit on a higher high. That's a little bit of a volume divergence. It doesn't surprise me that the market has kind of topped out here for now, and it seems to be pushing to the downside. We are still in short time frame control. We are below weekly kickoff high, above weekly kickoff low, which was pretty deep here this week. This previous weekly kickoff level really brought our support for the week. 30-minute chart. Settlement all the way up here. Remember, we're in short time frame control. There's probably going to be some overnight shorts that are in this market. We do not have a gap. We did not have a gap on the open. So we're really kind of, I think, leaning on our overnight low and our overnight high for possible opportunities. And if we have, if we got a little in front of this move to the downside here, we're sitting in a profitable trade right now. Not too sure if it's going to hold, and you make sure that you're trading close to your points of invalidation. Okay, so, and let's look at the Japanese yen. I've been waiting for this pop in the Japanese yen, and it finally happened. We see that the market has been moving lower over time, lower lows on lower and lower and lower volume. Volume starts to come back in when the market starts to move back up. We get the move to the upside last night. Taking a look at the 30-minute chart, what does it mean for us? Well, we've got our settlement down here, 94.81. We've got overnight longs here. If we can't close the gap relatively early, I'll look for opportunities to continue this move to the upside. Perhaps give us another test of weekly kickoff high. And yeah, I think the most important thing I can say about this market is we've kind of bottomed here. If we cannot close the gap at some point today, I think that's going to be important information moving forward. I think that's going to be telling us that buyers are coming into this market. The dollar again, not just kind of steady here for us this morning. So, anyways, hopefully this is going to be helpful for you. I appreciate everybody for coming. I do have a brief announcement. Next Wednesday at 3:30 Central Time. If you saw the webinar that I did with clinical psychologist Dr. Andrew Menaker, he's going to be back for a series of those with me. We are going to be discussing barriers that traders face and that some of the psychological reasons for those barriers. We will be letting you know and inviting you to that very shortly. And I'm going to be putting the URL in the uh, chat on Monday morning. It's a limited seating. There's only 100 spots that I'm going to be able to have for this. So I want to offer all of you the opportunity to sit and listen to Dr. Menaker. He always makes me feel happy and safe when I talk to him. I hope you feel the same way. And again, this is going to be a series. We're going to go every other Wednesday till the middle of December. So we're going to be answering questions on the fly. You're going to be able to ask questions directly to a clinical psychologist who's also an active trader and works with many, many institutional traders. Dr. Menaker knows his stuff, and I'm happy to bring him to you. So we'll be talking about that invite soon. That's going to be it for me. I'm going to get ready here. We've got a couple of minutes here before the equity open. Stay humble, grateful, creative, and happy in your trading today. Say a prayer for everybody affected by COVID. Stay safe, stay clean, wash your hands, get out there and profit. I'm going to see if there's any particular questions that I can answer right now. Yeah, Lacey says no trading today. Shane, good to see you. It looks like we've got a bunch of new people here. I really appreciate you coming. Hopefully you keep coming, and hopefully this is going to be a great resource for your trading, and that's why we do it. That's why I'm here. We are here for your success. So get out there, profit. That inside John, 100 seats. Okay, well, Brian, I appreciate that. I don't think we're going to necessarily have a problem filling those seats, but I want I kind of wanted to let the viewers know about it first, the people that I work with on a daily basis first. But I don't know if I'm going to get that opportunity today. So, but I will be putting it out on Monday morning. Join me Monday morning and sign up for it. If it goes really well and we have more demand than the supply we have, we can fix that. We can add seats. But we're going to start on Wednesday with just 100 and see how it goes. Take your deep breath. Get out there and profit. Have a good day. Protect profits that you've made throughout the week. Always something to learn, even if we're just watching. Have a great weekend. Again, stay safe, stay clean. Lacey says bye. We'll see you on Monday. Trade well.